Okay, guys, this is the book I have found. I will upload it today for your reference. And there are a couple of definitions that we'll again have to go through. For example, what we saw yesterday about indirect expenses and direct expenses. There has been a mistake in that. This book will clarify it much easier. Okay. There's also video links in there.
Huwag ka maingay.
Okay, so we start over here again with direct materials and much explained definition of direct material. So materials are unprocessed items used in manufacturing process. According to the definition, direct materials are those materials used in making the product and are clearly and easily traceable to the particular product. For example, iron ore is a direct material to a steel company. Okay, because the iron ore is clearly traceable into the finished product, that is steel. In turn, steel becomes a direct material to an automobile manufacturer. Some materials, such as glue and thread used in manufacturing, may become part of the finished product, but tracing this material to the particular product would require more effort than is sensible. Such product, called indirect material or supplies, are included in manufacturing overhead. So indirect materials are materials used in manufacture of a product that cannot or will not, for practical reason, be traced directly to the product being manufactured. Indirect materials are part of overhead, which we will discuss later. Okay, this paragraph number 2 makes clear what indirect material are. Yesterday we have done it incorrectly, that we have taken some of the indirect material as direct material. So we followed a simple definition. If something is used in the manufacturing plant, it is direct, while if something is used in the office or outside the manufacturing plant, it is indirect. But here the book is using a much different definition. So just like glue and thread are used in manufacturing furniture. Let's say somebody is making a sofa with a cloth cover or with a leather cover. They will need glue and thread to make the cover of the furniture or to join the parts, right? Really, we would as material into product. So cost accounting includes them in manufacturing overhead, not in materials. So they are not office expenses. They are still manufacturing expenses, but just the heading for those is manufacturing overheads and not uh, direct material. Okay, so such things are manufacturing overhead, where indirect material are those that are used in the manufacture of the product that cannot or will not for practical reason be traced directly to the product. So indirect material are okay, yeah, they cannot be traced directly. I mean, you cannot correlate them directly to the product. So direct material would be the product that is converted, and indirect material they are saying here are additional products that are used in manufacturing uh, that are not your finished product itself but support the process. So for example, if we take the example of furniture here, then wood, timber, or other types of wood, plywood, they would all be direct material because the wood is converted from like raw wood into shapes and then into furniture, whereas the glue and thread used to make that furniture is an indirect material because the glue and thread is not converted into furniture, they are used to make the furniture. Okay, so important thing to remember now, after we made some solution yesterday. So this is the definition we're given. Now for direct labor. Direct labor cost include the labor cost of all the employees actually working on the material to convert them into finished goods. As with direct materials, direct labor cost of a product include only those labor costs clearly traceable or readily identifiable with the finished product. Okay, so what they're saying again here is direct labor does not mean every labor working in the manufacturing plant. So every labor in the manufacturing plant is not direct labor. Only the people who are working on converting your raw material into the finished product are direct labor, whereas other people are not. So what they say here is, let's say the wages paid to the a construction worker, a pizza delivery driver, and an assembler in an electronics company are examples of direct labor. Pizza delivery driver, in case it's a pizza shop. So if it's a pizza shop, the pizza delivery driver is a direct labor. The construction worker for a construction company is a direct labor, or the assembly plant worker or assembler in an electronics company that works on the manufacturing line is an example of direct labor. Right now, second paragraph says many employees receive fringe benefits. Employers pay for payroll taxes, pension cost, and paid vacations. These fringe benefits can significantly increase the directly labor hour, the direct labor hourly wage rate. So some companies treat fringe benefits as direct labor. Other companies include fringe benefit cost in overhead if they can be traced to the product only with great difficulty and effort. Okay, so this they are saying is dependent from company to company how they are going to treat it. So for our purpose, we can treat it as direct labor. If let's say the assembler or the construction worker or the pizza delivery driver is receiving fringe benefits like payroll taxes, pension costs, pension paid by the employer, or paid vacation, then we can take that as direct labor. So firms account for some labor costs, for example, wages of material handlers, custodians, and supervisors as because of tracing these costs to the products would be too great. So these indirect labor costs are part of overheads. Indirect labor consists of the cost of labor that cannot or will not for practical reason be traced to the product being manufactured. So again, indirect labor is people that are still working in your manufacturing plant, but they are not working on the product. They are additional people working in the plant on some other factor of your production. Like the people they mentioned here are material handlers. So material handlers would be people who are involved maybe in the packaging, maybe in bringing the raw material from the warehouse to the manufacturing plant, such people. And then custodial workers. Custodial workers. Custodial workers could be the people that manage the warehouse, that manage the custody of the material in warehouse, could be those. And supervisors. So people like these, they are working in the manufacturing plant or they are working in the manufacturing, but they are not directly involved in converting our raw material into the finished product. So the definition or the classification given here is different from what we used in financial accounting. Okay, financial accounting, we used a simpler definition that some expenses being incurred in the office are operating expenses. If they are incurred in the manufacturing plant, they are cost of sales. But here they have given that even though the cost is a cost of sales or a direct cost, direct material are different and other manufacturing overheads are different. So they are still counting those expenses as cost of sales. So like in financial accounting, if we look at direct materials, for example, they say glue and thread here. Glue and thread used in manufacturing furniture. In financial accounting, we would use that as a cost of sales. Cost accounting is also using that as a cost of sales. So they are still treating that as a cost of sales, but they have further classifications of those costs. So under cost of sales, they are not putting this for direct material. Okay, they are putting this for indirect material. So indirect material, as they are saying, is not office expense or it is not operating expense. It is still a manufacturing expense, but it is not a direct expense. Okay, so does everybody understand that? I can explain that again. Okay, so let's go to the problems we solved in financial accounting. So what they are saying is this section of cost of sales is what we are discussing. And in there they have direct and indirect costs. So indirect costs are not part of operating expenses. They are still part of cost of sales. Okay, so they are here. They are a part of cost of sales, but it is just that they are saying they are different. So there is direct materials, indirect materials, direct labor, indirect labor, and manufacturing overheads. They may even classify that into like direct overheads and indirect overheads. Okay, so they are saying here that let's say the furniture manufacturing company, wood or ply, or the plywood that we have, that is part of direct material, whereas nails, glue, thread is a part of sorry, indirect material. Okay, so while they are both still part of the cost of sales, while they are both still related to manufacturing, they are indirect materials, and they may be counted as manufacturing overheads too. So they are putting it under indirect material or manufacturing overheads. Same they are saying for direct labor. They're including that in the manufacturing overheads. So direct labor would be the assembler, or let's say carpenter in our case. Or let's say they're just the assembler. Okay, so assembler or who's working on the product, manufacturing the product, is a direct labor, but supervisor has been put in indirect labor. Okay, so supervisor is not a part of the direct labor in this case. So supervisor indirect labor and goes into manufacturing overheads. Okay, so there's still a part of cost, or the cost of cost of sales will still be the same thing, but it's just that they have a different classification for things like this. So let's go back, read that again. So that is direct material and direct labor. Then everything that was not included there has been put into overheads. So in a manufacturing company, overhead is generally called manufacturing overhead. Uh, okay, for manufacturing company. You also see other names for manufacturing overhead, such as factory overhead, factory indirect costs, or factory burden. Service companies use service overhead and construction companies use construction overhead. Any of these companies may just use the term overhead rather than specifying it as manufacturing overhead or service or construction overhead. Some people confuse overhead with selling and administrative expenses. Overhead is part of making the good or providing the service, whereas selling costs result from sales activity. Administrative costs result from running the business. So in general, overhead refers to cost of making the product or providing the service, except those classified as direct material or direct labor. So in manufacturing companies, manufacturing overhead includes all manufacturing costs except those for direct material and direct labor. Manufacturing overhead costs are manufacturing costs that must be incurred, but that cannot or will not be traced to the specific units produced. Okay, so the language here is a bit tricky. So what they are saying is every other expense other than the direct labor engaged in producing your product or the direct material used in producing your product is still a manufacturing expense, but that will be put into manufacturing overheads. So they've given examples here that are manufacturing overheads and not direct labor or direct material. So one is indirect labor includes repair and maintenance to the factory building and equipment. So the people that repair and maintain the factory building and equipment are included in indirect labor, but they are still put in manufacturing overhead, but not in direct labor. So it's just that these people will not be put into direct labor as they are not directly involved in producing the product. Then they have janitors in office building. Janitors in office building are also indirect labor. Okay, payroll taxes and fringe benefits for manufacturing employees would be indirect labor. Supervisor in factory buildings would be indirect labor. Depreciation on factory building and equipment is indirect labor. And other things they've included is material storeroom personnel. So people working in the warehouse, insurance and taxes on factory property and inventory, utilities for factory building. These are also manufacturing expense. Okay. Then cost accountant's salary. So cost accountant is a person who works for a manufacturing company. Even though he may be sitting in the office, he works like similar to a shop floor or a factory supervisor. Indirect materials include oil and nails. So other products too, like they have mentioned glue early on. Glue is used to bind the furniture, or when you put nails through it. Manufacturers also put glue so the joints are more secure. And that is also included in indirect materials. Then we have selling expenses. So these expenses we have not looked at yesterday, and we will look at them now before starting solving problems. So selling expenses, they are the costs incurred to obtain customer orders and get the finished product in the customer's possession. So advertising, market research, sales salaries and commissions, delivery and storage of finished goods, and selling costs are all selling costs. The cost of delivery and storage of finished goods are selling costs because they are incurred after production are completed. Therefore, the cost of storing materials are part of manufacturing overhead, whereas the cost of storing finished goods are part of the selling overheads. So since when the finished goods are ready, the production process is over for that product. Okay, so that product is not part of the production process anymore. Hence, it is included in selling cost. So remember the retailers, wholesalers, manufacturers, and service organizations all have selling cost to them. Administrative expenses. Administrative expenses are non-manufacturing costs that include the cost of top administrative functions and various staff departments such as accounting, data processing, personnel, executive salaries, clerical salaries, office expenses, rent for office, donation, research, and development costs. And legal costs are administrative expenses. As with selling cost, all organizations have administrative cost also. Product cost versus period expenses. Companies also classify cost as product cost and period cost. Product costs are the cost incurred in making products. These costs include the cost of direct material, direct labor, and manufacturing overhead. So product versus period cost is something that we saw yesterday too in our example. Product costs are the costs incurred in making the products, whereas period expenses are closely related to periods of time rather than units of product. For this reason, firm expense period costs in the period in which they are incurred. Accountants treat all selling and administrative expenses as period cost for external financial reporting.
I'm Larry Walther. This is principlesofaccounting.com, Chapter 17. In this module, we will extend what we learned in the previous module and consider more closely the concepts and definitions of product cost versus period costs. Product costs are simply those costs that result from the manufacturing of a product. They are your direct materials, your direct labor, and your factory overhead. Now, these costs are accumulated and reported as inventory until they're sold. And so another name for these costs is inventory. And so another name for these costs is inventoriable costs. When they are sold, they are expensed as cost of goods sold. This is in direct contrast to costs that are considered to be period costs, those that are not attributable to the production of inventory. That nature. We typically call them selling, general, and administrative costs. Indeed, we defined that better in the previous module. They are deemed to not benefit multiple periods, and so they are expensed as incurred, as the name period cost suggests. Now, to be clear, certain selling, general, and administrative costs do benefit multiple periods. For example, expenditures to acquire a new office building, where that office building perhaps has a 40-year life. In that case, we would capitalize the office building as part of our property, plant, and equipment. The depreciation of that office building, however, would be charged as a selling, general, and administrative expense.
Angie's here. I need you to be ready. Okay. We're going to be working together.
Okay, so they differentiate between product and period cost. Product cost, as they said, are something that you can connect with a product. That, okay, to manufacture 10 t-shirts, I needed one person for one day. So if one person is working one day and makes 10 t-shirts, then I can connect that how much labor is required to produce one t-shirt, right? 1/10 of one person for a day is the labor required to make the t-shirt. So that is connectable. Whereas the cotton required, the polyester required, the threading required, the threads required for stitching, they are all relatable to the product. You can connect them. So they are product cost. Period cost, as they say, are something that cannot be connected to the product, but they are incurred over a period of time. Just like fixed costs, we said. So just like we said about fixed costs, costs that occur invariable of your if your production is going on, or is it if the production is turned off. Some costs are still gonna be incurred. So like selling expenses, like if you have a sales manager, even if the company does not do any production, the sales manager salary is still gonna go. Or if the company is not in production anyway, then there is the rent for the manufacturing plant. So these are period expenses. They are expenses incurred regardless of if the production is going to continue or not going to continue. So as they mention here, period costs are selling and administrative expenses not related to creating a product that are shown in the income statement along with cost of goods sold. So this is not related to the expenses that are shown in the cost of goods sold in the income statement. Okay. Right. So now we have looked at that the definition for direct material, indirect material, direct labor, indirect labor is different from what we saw yesterday. And it has to be that or it has to be understood that direct material or direct labor would be costs that are much more closely connected to your finished products or to your manufacturing process. Whereas somebody who is not working in the manufacturing process, but is still working in the manufacturing plant, may not be a part of your direct material. Okay, so these things we have looked at yesterday, fixed versus variable cost, we know already. Direct versus indirect cost, we looked at now. So direct costs are something that you can relate directly to the product. Indirect costs are not directly relatable to the product. So direct cost, as they say here, can be a product cost like direct material or direct labor, or they can be period costs like an accountant salary would be traced directly to the accounting department. Okay, indirect cost is an amount that cannot be traced to a specific department, process, or job. So these costs are typically allocated to the department, process, or jobs using those items. Indirect cost can be a product cost like overhead or period cost like an IT employee's salary to the sales department. The sales department needs the service provided by IT, and IT employees' time would be indirect expense to the sales department. So let's look at the example here again. They will elaborate on what the difference between direct is.
The Federal Aid Highway Program supports local public agencies, or LPAs, with funding for highway-related construction projects. This funding is in the form of reimbursements or payments for allowable project expenses. In deciding whether and how to apply for funding, LPAs need to know which project costs are allowable to qualify for reimbursement. There are three basic conditions an expense must meet in order to qualify as allowable. These three conditions are that the expense must be necessary, reasonable, and allocable. We'll explain more about each of these conditions in a few moments. But first, let's get an understanding of the two types of costs that make up a project's total cost: direct and indirect costs. A direct cost is an expense for an item or service bought specifically and entirely for the project. Some good examples of direct costs are project travel, rights of way, equipment usage, employee salaries for time specifically devoted to the project, and project building materials, such as concrete and asphalt. An indirect cost is an expense for an item or service that benefits more than one project or purpose. These may be costs experienced within a department of the LPA, for example, within the accounting or facilities maintenance departments. Some good examples of indirect costs include those for accounting systems, buildings and facilities, general office equipment and supplies, as well as costs for salaries and other compensation for employees who carry out these functions. In order to request and qualify for reimbursement on federally funded projects, an LPA will need to provide evidence of the costs related to the project to its State Department of Transportation or state DOT. Invoices can serve as an appropriate record and evidence of the expenses for the purpose of reimbursement of direct costs. However, to include indirect costs for reimbursement on federally funded projects, you must develop an approved Indirect Cost Allocation Plan, or ICAP. Your ICAP will need to spell out all of the methods the LPA will use to consistently allocate indirect costs to all projects. Now that we have discussed the difference between direct and indirect costs, let's go back to the three conditions an expense must meet in order to qualify as allowable. As you may remember, the expense must be necessary, reasonable, and allocable to the project. First, necessary expenses are those without which the project cannot be completed. Some good examples are safety equipment or construction materials such as steel and asphalt. The second condition an expense must meet to qualify as allowable is that it must also be reasonable. To determine whether an expense is reasonable, you must look at the amount paid and the circumstances under which the purchase was made. A good rule of thumb is to ask, would a sensible person pay this expense under the same circumstances? If the answer is yes, then the cost is reasonable. The third and final condition that an expense must meet in order to qualify as allowable is that it must be allocable. To be allocable, an expense must directly benefit the project. Some examples of allocable expenses are those for project-related salaries, supplies, travel, materials, and services. In summary, federal aid highway project expenses must be allowable in order to qualify for federal reimbursement. To be allowable, they must meet the three conditions of being necessary, reasonable, and allocable. For additional guidance, contact your state DOT.
Okay, so I hope now everyone understands that direct and indirect costs do not have anything to do with office expenses and manufacturing expenses. They can both very well be manufacturing expenses, but direct and indirect is just a way of saying if they are directly related to your product, or if they can be traced to your product, or if they cannot be traced to your product. So if the expense can be tracked or traced along with your product, it would be considered a direct cost if you can attribute it to each unit, right? So the example that I would give is, let's say there is the plant's rent. Okay, there is a rent for your plant every month, and then there is the raw material consumed in your plant to make the product. And let's say the plant or the manufacturing plant is used to make furniture. So it's a furniture manufacturing plant with carpenters and people working in there to make like furniture, like sofa sets or beds, bed frames, something like that. So the difference between rent and raw material would be, you can connect the raw material to the furniture. So the amount of wood you consume will be reflected with every product that you produce, right? So the number of product, as they go higher and higher, you need more and more wood. So they can be connected. At the end of the month, how much wood you consumed would be related to the amount of furniture that you produced. But the rent of the plant or the manufacturing site, if they are paying a rent, that rent is not connectable to every unit, right? So let's say the rent is fixed for every month at $10,000. Okay, so depending on how high or low your production was, for a month, the per unit rent would be higher or lower, right? So if you manufacture 200 furniture units in a month, and let's say next month you manufacture 500. So the first month your production was at 200, second month at 500. So as you can see, the percentage of rent or the amount of rent that you are paying per unit or per unit of furniture that you manufacture is low when you're making 500 units, whereas when you're making 200 units, the rent factor is high. So that is why rent is considered indirect cost, because you cannot directly connect it to your furniture units, whereas raw material would be directly connected. The month you manufactured 200 units will require more wood for the furniture. The month you manufactured 500 units, it will require even more, right? Or it will never be zero. Whereas for the rent, it cannot be associated with how many units of furniture you made. They may be more or less, right? So that is why rent is an indirect cost, because it is not connected directly to your product. Whereas the wood is a direct cost because it is connected directly to your product, that is furniture. So that is what they mean by direct and indirect costs here. Then there are controllable and non-controllable costs. So costs that are out of control of a manager, we saw these yesterday, are non-controllable costs, whether costs and the cost that can be changed or is under the control of the department is called a controllable cost. There are then differential costs, including sunk and opportunity costs. So we also read about these yesterday. Sunk cost, as I said, are costs that cannot be recovered, or money that is spent on some part of your manufacturing that will not be recovered in the future. Okay, and opportunity cost, as I explained, are costs that are incurred on choosing between two opportunities. So if you had, as we saw yesterday, the choice to choose between two kinds of raw material in order to manufacture your product. So when you choose one type of raw material, you are letting the other one, other choice go. So that is the opportunity cost for your product. So that clarification was necessary as to what direct and indirect costs are, because the methodology that we used yesterday was not correct. So this is a much better understanding of direct and indirect cost. And now we are coming at the statement of cost of goods manufactured, or cost statement as it is called. This is the statement. We will come back from our break and then look at this in detail. So let's come back at 10:05, and then we'll start looking at our first set of problems and solutions for cost accounting, starting with this one. So now that we have clarified what types of costs are, or how do you identify cost, we are now moving to the problems and solutions that we're going to solve first. So as I told you, this is quite similar to the income statement that we see in structure and in process too. So before reading all this, let's just look at the statement, how it is produced, the cost statement. The cost statement, or as it is called, the statement of cost of goods manufactured. So for a manufacturing company, it is called the statement of cost of goods manufactured. Now, this is an example given for a company, that is Farside Manufacturing Company. And you will have to commit this structure of the statement to your mind. That is how the problems are to be solved. So what you have here again and again is the opening inventory, then material purchase minus the closing inventory. That is something that will repeat again for manufacturing costs. That is opening work in progress. And if there is a cost of work in progress for this year, then that will be added and minus the closing cost. And in the third step, it moves to the income statement. Income statement that we solved before for financial statements, that's the same here. We have income, sales here, then cost of goods sold. Cost of goods sold here, and then we have our operating expenses here. So we'll come that to later, to that statement later. First, we'll look at the statement of cost of goods manufactured. So the cost statement of a production company or a manufacturing company has this structure. First, we look at the direct materials used. Okay, that includes the raw materials. So this part is the raw material that was used. So we add all the raw materials and we reduce the indirect material used. So let's say it was the same furniture manufacturing company, the factory that makes furniture. If that was the statement here, we will have the raw materials over here. Raw materials will include furniture, glue, nails, wood, cloth, everything will be here. Okay, so we will have opening inventory of furniture. Now, opening inventory means if you are making the cost statement for 1 year, let's say as they are making it for 1 year in this situation, if you are, they will inventory company will own product and they start on January cost statement started, or where the company started a new year, they already had some material with them in the plant, right? The company is never completely exhausted of material. They have some with them. So they had some on January 1st. And then there were purchases of raw materials made throughout the year. And then there was some material left on 31st of December. So what is happening is when you started the year, the company already had some material. During the year, as the manufacturing was continuing throughout the months, they purchased new material to manufacture new furniture. And then at the end of the year, they are left with some wood in the warehouse again that will be used next year for the next manufacturing season. So why we use all three of these things is we want to determine how much raw material was used during the year. So you already had some from last year, you bought some during this year, and then you were left with something at the end of the year. So what we want to determine here is how much raw material was used in the manufacturing. Okay, the term says raw material used. And to determine that, the simple process is always the same. Okay, whenever it is said that raw material used or anything during the year, you always use the same process. That is, how much was it during the start of the year? So if you want to determine how much raw material you consumed during 1 year, you need to know how much you had during the start of the year, how much you purchased during the year, and then minus how much that was left after the year. Okay, so obviously what was left at the end of the year on 31st December was not consumed, right? It is left at the end of the year. So you did not consume it. you cannot refer to that or consider that as a raw material you consume. It is just raw material that you have left with you now that is not consumed. So we did not include that amount, hence we have to reduce it. So because the raw material that is left with us on 31st of December is of no use to cost accounting, because you did not consume that raw material, that cannot be considered as a cost. When you consume it next year, it will be considered a cost. So for this year, this 30,000 is not a cost, that is left at the end of the year. Okay. And what we had during the start of the year is a cost. So when you started the year, you already had $40,000 of raw material. And that was consumed during the year because you had to purchase extra, right? You had to purchase extra material here. So obviously this $40,000 was also consumed. So you consumed the raw material that was available with you on 1st of January. Then you bought additional raw material from the market. You purchased additional to continue with your manufacturing process. And then at the end of the year, you were left with some of the raw material that is worth 30,000. So in order to determine how much you used, you will use the one you had, the one you purchased, and minus what you're left with. That will give you the raw material used. 490,000 as it says here. Now that thing comes again if we look at look at this cost of goods sold. We have the finished goods inventory. Now cost of goods sold is calculated here. Okay, 1,090,000. How we arrive at that amount is also the same process. You have finished inventory at the start of the year. Then you add the cost of goods manufactured to it. And then you minus the finished goods inventory that was left on 31st of December. So same process that we use for raw material, it is used here. You have what's at the start of the year, then you add what you expensed or what you spent during the year, and then you're left with something that and then you're left with something at the end of the year, right? So you add the opening amount plus whatever purchases or expenses were made during the year, and then you subtract the finishing inventory or the finishing amount of 31st December or the end of your period. Okay. So similar is what we are doing with raw material here. Raw material used is 490,000. So there is raw material at the start of the period at 40,000 plus what you purchased 480,000 minus what is left at the end of the year, again 30,000. So what you consume during the year is 490,000. That is 40,000 plus 480,000 minus 30,000. Okay. Then indirect material used will be here minus. Indirect material use is reduced because indirect material is a part of manufacturing overhead and not direct materials. So that we discussed during the start of our lecture, that indirect material is not part of direct material, it is a part of manufacturing overheads. So we have direct material here, 490,000. Then we need direct labor. And this will be also generally provided that your direct labor amount is 380,000. Now for direct labor, you do not have to make a similar calculation. like what was it during the start of the year and what was that during the end of the year. Because labor is not material. Okay, you do not have an opening labor and you do not have a closing labor. Okay, labor just comes and provide the services in your process and they leave. So you do not have any opening or closing or January 1st labor or 31st December labor. So you just have your direct labor. So once you've calculated the direct material and direct labor, then we come to manufacturing overheads. So as mentioned during the start of the lecture, everything that is spent on manufacturing but is not a part of your direct labor or direct material is then a part of your manufacturing overhead. So these are expenses that are spent on your manufacturing plant or the manufacturing factory, but they are not a part of your direct labor or direct material used. So that includes indirect costs like indirect labor. So indirect labor is a part of your manufacturing overhead. Then other expenses that are related to your manufacturing but are not part of direct expenses or direct labor, direct material or direct labor. So we have maintenance and repair expenses, factory utilities expenses, depreciation expense on the factory and equipment and other expenses of the factory. So all of these are factory expenses or manufacturing expenses. Now that gives us a total of the total manufacturing costs, that how much money was spent on manufacturing the product. Okay, this is the first step of cost accounting, total manufacturing cost. You add direct material, you add direct labor, and you add manufacturing overheads. So direct materials plus direct labor plus manufacturing overhead or overheads gives you the total cost of manufacturing. You can see below that there is the title called cost of goods manufactured. So we have total manufacturing here, and then we have cost of goods manufactured. This is a separate title given to signify something of relevance. So manufacturing plants have a raw material that is introduced to the manufacturing process. Then that raw material is worked upon. Some people will work on that raw material and convert it into a finished product. Okay, so that material will be converted into a finished product. So you will have some raw material on your hand and you will have some finished product. So let's say if you manufacture furniture, if the factory manufactures furniture, the factory will have some wood on their hand, wood, cloth, and other raw materials. They are part of the products that are used to manufacture furniture. So they have some stock of wood, cloth available to them. Then they also have some stock of furniture that is ready-made available to them. While in between the process, there are some things that are not yet completely manufactured, but they are still in the manufacturing process.
Okay.
Okay. So as I said, there are some materials that are part of your raw material, like wood and cloth for the furniture factory. And then there are some materials that are finished products. That is that the company has some furniture that is already made available with them. while in between there is also some product available that is not finished yet. So what will happen is when you create the cost sheet, like this one is created on 31st of December. What will happen on 31st December is you will have some furniture in your stock available that is not fully made yet. Okay, that is not fully completed yet. But is still under the process of being manufactured. Right, so this will be furniture, let's say that the wooden frame is made, or for which the cloth stitching and the covers are made, but the wooden frame is not made yet, or some part of the process is complete, but the finished product is not ready yet. So you cannot call this raw material, and you can also not call this finished material, right? So if your company manufactures, factory manufactures a furniture set, and let's say it's a sofa set with cloth padding or a cloth seating area on it with a wooden frame. So in this case, if you have the wooden frame ready, but the cloth part hasn't been attached yet, like the back cushions on the back and cushions on the bottom are not fixed to the furniture yet, and only the wooden frame is ready. So what will you call that? That cannot be called raw material, because it is not wood and cloth. It is being worked upon. It is not raw wood anymore. And it is also not the finished product. Your finished product is a sofa, and this sofa is not ready yet. So in cost accounting, it is called work in progress. Or what you see below the total manufacturing cost is work in progress. So for example, like automobile manufacturer or car manufacturer would have the same issue. The car starts with aluminum, and then it's converted into a car, or practically a car that is sold in the market. So in between, there is a lot of processes involved. Like you have to convert the aluminum into engine blocks, into transmission, body frame for the car. You have to use steel. So every stage of the process where your raw material, between your raw material and your finished product, will be the work in progress. Okay, so we will have the work in progress here. It is just like raw material, but the only difference is it is not a raw product yet. It is between the process of raw material and finished goods, called work in progress. So same thing we will do to that. We will add what was there on the 1st of January. That is what was the opening work in progress or work in process. And we will reduce what was there on 31st of December. So what is left to us is the cost of goods manufactured. Now, this book, or how they are solving it, they have separated the cost of goods sold from the cost statement, or they have created the cost of goods sold over here. What can else be done is we can calculate the total cost of the company by putting this back into the previous statement. So we had this statement where you have the direct material plus direct labor plus manufacturing overhead, adding up to be your total manufacturing cost over here. And then you have your work in process inventory for 1st of January. And your work in process inventory for 31st of December, that adds and reduces to give you the cost of good manufactured. Now to this statement, we can just attach this part. This much part of the statement, we can just attach it over there and we can have our total cost. But for this statement, they have separated it. So when we are solving problem, we can solve it both ways by attaching this or detaching it. Since you already know what this is, okay, we already know what this thing is. We already solved this during our financial statements. It's the same thing here. Only the weird part that you see here or that seems confusing is this much. Okay, this much part is what they have changed here. Everything else is same. So now what they do is, now you have your raw material, that is what was your manufacturing cost, your direct material plus direct labor plus manufacturing overhead. How much was that? That is your cost plus the work in progress that you had. Now what else are the kind of costs that will be added to it? Now you have your finished inventory. So you also have to account for your finished inventory. That is when the year started on 1st of January for the furniture factory. On 1st of January, you already had some furniture that was ready in the warehouse, okay, for sales. That was manufactured last year, but it was to be sold this year because it was manufactured on 31st of December, right? So on 1st of January, you have some inventory in the warehouse of finished furniture. Then over the year, you manufacture furniture. That is this part. You spend money on manufacturing furniture. And then at the end of the year, you are again left with some furniture that will be sold the next year. That is finished goods inventory for 31st of December. Now you do the same process here again. You add what was there on 1st of January. You add what was spent during the year, and then you subtract what was there on 31st of December. Okay, so same thing you do here. Add 1st of January, add the expenses for the year, and reduce what was there on 31st of December. This gives you the cost of goods sold. That is the next step in cost statement or calculation of costs. So this is the cost of goods sold. Gross margin is nothing but sales minus cost of goods sold. Okay, so the next step is cost of goods sold, that is calculated here. Now the only expenses that are left are those that are out of manufacturing. So expenses that are not spent in the manufacturing plant, but other than that. So that includes your selling and your administrative expenses over here. So that gives you your total operating cost or total expenses. So total operating expenses, 500,000, and from that you calculate income from operations or the profit for your company. Now in a cost statement, we can just grab this and take this to our cost statement up there and add it to create our total cost. So anyone have any question about this structure? This is how we are going to solve our problems. Every problem that we solve for the manufacturing companies, not for service companies. Service companies will have a different structure, but for manufacturing companies, this will be the general structure that we follow for every problem. So just like you committed the structure to your mind, or you tried to or for you remember or journal and account, simply remember this. On the top, some things come after that, and there is a way we solve it. So the question will be the same things that you see here. Everything that you see here will be in the question, but it's just that you have to remember what its place is. Is it where it belongs in the statement? Okay, so for example, like you have to remember where indirect labor belongs, or where raw material used or raw material belongs. So raw material purchases for the year, where they belong. So you just have to remember where those items belong in this structure and whether they are added or reduced. So there are something that are reduced, like raw material inventory for 31st December, that is minus. Okay, like work in process on 31st of December, that is minus. So you have to remember that. And obviously after practice, when we have solved like 10 or 12 problems of these things, you will have these things committed to your mind, or you will remember how to do them. But right now, all you have to understand is the problems that we're going to solve is they will be having these items that you see here in a jumbled format. And all you will be doing is converting them into this statement, that remembering where some items belong, placing them there, adding where they are to be added, subtracting where they are to be subtracted, and reaching the answer. Okay, that's how we are going to solve it. So let me just create this into one statement and provide it to you in an Excel sheet. Yeah, I'll just create an Excel sheet with one statement that is easy to remember and see. So we'll give them general names here that are easy to remember. This will be called D. Let's call this E. Okay, so that's how we reach a total cost or the cost statement. This is a much more better elaborated, and it also tells you where you have to add something and where you have to reduce something. So I will upload this on your Brightspace too, and maybe I'll send it to you by email also. So what are the titles here? Let's just call it the cost statement. For some period ended. So this is the cost statement. So adding all these, you arrive at the total cost. there can be problems where you have to solve for two amounts instead of one amount. Okay, there could be units, number of units given to you, and everything could be amount and per unit. So what will happen is in the question, as I told you, all these things will be given, but they will be in a jumbled up way. Some things on the top, some things on the bottom, and no totals made. So you just have to remember where something belongs and put it at appropriate place and add or subtract as they are necessary. Even the things that are subtracted, I'll make them identifiable. Let's make them metallic so they are better visible. Okay, so I hope very few people among you still understand what's going on, right? But that's not to worry. The good thing about this course is we have to not do many things and we can spend a good amount of time practicing these things so you can solve them correctly. So we have around 2 to 3 weeks to solve this. Actually, around 3 weeks. For 3 weeks, we'll be doing the same thing. Okay. So this is one problem that is solved already. Rather than this, we can solve a problem that is not already done and move towards it.
There are all the same format.
Sorry?
Are all the same format like the
Yeah, like our financial statement, this is the constant format. Everything you solve will be according to this.
according that. Yeah.
Yeah, you just have to remember, like sometimes they won't mention the name. Like let's say they say uh, factory janitor salary. Okay, a janitor that works in the factory. So is that a direct labor or indirect labor, or is it a operating expense? So you just have to identify that. Like a janitor working on the factory is not a direct labor, right? Because they are not working in the production process. They are a part of the manufacturing overhead and they are indirect labor, right? So you have to remember such things like janitor working on shop floor will be indirect labor, whereas janitor working in the office will be administrative expense or operating expense. So you have to just remember three things here. So just like in our financial statements, we had to remember two things. Here you have to remember three things. So first, looking at financial statements, income statement. When we solved income statement, we looked at two things. If an expense is made in the production process or in the production plant or manufacturing plant, it is cost of sales. If the expense is made in the office or outside the production process, then it is operating expense. That is what we remember from our financial statements or from the income statement. Now the only difference here is the cost of sales is divided into two things, direct and indirect. Okay, this part is the direct part and this is the indirect part. So you just have to remember that now your cost of sales are divided into two parts. So direct labor and indirect labor would mean direct labor is the labor that is involved in converting your raw material to the finished product. People that are actually working on the product. Janitor is working in the shop floor, which makes it makes it a cost of sales. But the janitor is not working on the product. They are supporting the services. Okay, so they are part of indirect labor and not direct labor. So a worker that is actually working with a hammer and a chisel or with a drill machine, producing the product that is needed, that is direct labor. And the janitor is not. Even though both of them work in the manufacturing plant, for income statement basis, they are both part of cost of sales. But for cost accounting, they are not part of the same thing. For cost accounting, one is direct labor and one is indirect labor. So such are the things or similar things you have to remember. So yeah, don't worry about it. We are going to solve many problems, so you will eventually remember them. We can here start with the first one. So on the book, this book I will send you today by email, and I'll put it on Brightspace after the lecture. So right now, just so we do it together, I want you to just look on the screen and then we'll try to solve it. So exercise C here. Exercise C says Gore Company makes products for sporting events. Okay, so Gore Company is a manufacturer that makes products for sporting events. The following data for the year ended 31st December is available. So you have the following data for 31st December when the year ended. And you have a list of things there. Material inventory of Jan 1st, 31st December, material purchases, direct labor, and work in process, manufacturing overhead, and finished goods. So this is a trivial one, or a rather very simple one. We look at the question here. First thing is materials inventory. Materials means raw materials. Okay, so they might call it raw material, material inventory, or just materials. So materials inventory on 1st of January is 45,000. Now 1st of January means this is the start of the period. Because the second number given here is 31st of December. So obviously that is after it. So 1st of January is the start of the period. So we will just look at our cost statement. And we see in the cost statement, raw material inventory start period. So we'll create something similar for our problem. So you will call it cost statement for Gore Company for year ended on 31st December. So that's how you start solving a problem. Cost statement for Gore Company for the year ended 31st December, since that is the name of the company. The statement says first is material inventory for January 1st. That is 45,000. Looking at sheet 1, that's where we start the solution of a problem. So that is raw material inventory period start. Raw material inventory on January 1st is 45,000. So raw material inventory on January 1st. Then what do we need? We need raw material purchases for the year, or how much raw material did you purchase during the year as our next step. So we look at the question, do we have raw material purchases? We have raw material inventory on 31st December here. That will come later on. First, we need raw material purchases, or how much did you purchase during the year? So material purchases here says 175,000. So we have the second item, that is material purchases, 175,000. According to the format or the process, next thing we need is less raw material inventory for the period ended. So less raw materials inventory for period ended. Let's just call them raw, not to confuse anything. Here. So we have less raw materials inventory, that is on 31st December, 65,000. So 65,000 less raw materials inventory on December 31st. Next, what do we need? Next, what we get is raw material used for the year. When you add all these three, you get raw materials used. So we write raw materials used. That will be 45,000 plus 175,000 minus 65,000. 155,000. Okay, that is raw material used. Next, it says here less indirect materials used. So if we know, is there any indirect material here? We do not know any. The question doesn't specify. We do not have any indirect materials over here. Okay, so we'll skip that and go to the next step. If that is not there, then our answer is A, that is direct material used. Then we get A, that is direct material used. It is 155,000. So we get our point A here. So we get our point A. We can make it bold if we want. Yes. Then what do we have? We have point B, that is direct labor. So we just write direct labor straight ahead because it doesn't have an opening or closing amount. So next is direct labor, 225,000 provided in the sheet here. Okay, so B, direct labor, goes straight outside. 225,000. Then next one. After direct labor, what's the step? After direct labor, we start looking at the manufacturing overheads, like indirect labor, maintenance and repair, factory utilities, depreciation, other expenses. So we do we have any manufacturing overheads. It says here direct labor, then it says work in process inventory. We do not need that. Work in process inventory, 31st December, we don't need that. So we had just one amount that says manufacturing overhead. It is 130,000. So we just have manufacturing overhead, not mentioning everything, anything special. Manufacturing overhead is 130,000. This is point C for us. Manufacturing overhead. Yeah, since we do not have all of these, we straight away came to manufacturing overhead. Let's just see it's manufacturing overhead. Okay, so we are at point C, done now. Now we go to point D. That is total manufacturing cost is A plus B plus C. So we'll do our number D here. Total manufacturing cost. It is 510,000. Total manufacturing cost is 510,000. What's the next step? After total manufacturing cost, the next step is work in process inventory period start and less work in process inventory period end. So do we have those? Yes, we have them. Work in process inventory for January 1st and 31st of December. So we take both of these for our solution. Work in process January 1st. Then less work in process December 31st. What are the amounts? 30,000 and 40,000 respectively. 30,000 and 40,000. So we have point E, cost of goods manufactured now. So we reach point E, cost of goods manufactured. So this is actually D plus E, right? It's right here. D plus E. Minus So that is 510,000 plus 30,000 minus 40,000. So 500,000. Cost of goods manufactured. Then we have point F, that is finished goods inventory period start. Okay, so do we have finished goods inventory in this question? We do. We have finished goods inventory on January 1st and on 31st of December. Right, then we have finished goods on January 1st and less finished goods on December 31st. No, sorry, we do not take that here. Nope. Finished goods on January 1st is 80,000. Next step is cost of goods manufactured is added to it. Then cost of goods manufactured is this 500,000. That gives us cost of goods available for sale. $580,000. So this is this will be called F here then. So let's call this F. And this will be E plus F, 580,000. So now we have cost of goods available for sale here. Next step is less finished goods inventory period end. So we write less goods December 1st or finished goods inventory on December 31st. Finished goods inventory December 31st is 140,000. So minus 140,000. That gives us cost of goods sold. Or G cost of goods sold. That is all, sorry, this and this. 580,000 minus 140,000. 440,000. So cost of goods sold is 440,000. Then we have operating expenses, selling expenses, administrative expenses added here. But the question does not have any operating expenses. Plus the question also asks us just compute the cost of goods sold. So it says compute the cost of goods sold, and we have done it. So cost of goods sold is 440,000. So that's how problems will be solved. You will look at the structure of how it is to be solved, and then solve it, enter the amounts and particulars accordingly. For the first few problems, you will have to refer to this one. But then after that, you will have memorized it. You can solve it much faster. So any other problem they have here? Okay, so try if you can solve problem number C. I will just mark your attendance and then we'll solve problem number C. Is it visible? Yes. Can you read it
Did you
once?
get the cost of gold sold for 40,000?
Yeah, that is 580,000 minus 140,000. So let's give that a letter too, so we'll call this as G. Let's call this G. And let's call this H. And this is I. So I is G minus H, sorry, G plus H.
Sir,
Or
can you share the
H.
screen, please?
Yeah, sorry. So we'll name the cost of goods available for sale as G. Okay, item G. And we'll name the less finished goods inventory minus as H. Then I will be G minus H. Right, and H will already be negative, so you just remember that it is minus. Don't put minus and then say it is plus. Okay, so this is I. So this should be J. Let's also call this G. Again H. And this is I. So this is no, this one. G minus H. 440,000. So try this one. I'll just mark your attendance and be with you. Okay, so we do not have Devon in class today. Devon is not here.
I'm here, sir.
Where are you? Oh yeah.
I use
Oh
my
yeah,
phone
yeah, yeah. Oh, okay.
today.
Right. I was looking alphabetically and
And
I
yesterday
didn't see.
too, sir. I'm here.
Yeah, yesterday I saw you. Okay.
Sorry
Okay.
about that, sir. Because my name is not the same on my laptop. I'll
Yeah.
change.
Okay. Yeah. If you can change it, it says
Yeah.
Devon, right?
Sorry about that.
Okay.
And Monday too, sir. I'm present.
Yeah, I'll check that. Might have marked you.
Okay, sir. Thank you.
Okay. And Bernadette is not here. Bernadette.
She's here, sir.
Nope. No, she's not here.
She was here earlier, sir.
Uh-huh. Oh, might have got disconnected then. Okay. And Maricel is not here. Maricel Naguit.
Oh, sir, I'm here. I'm always present.
Where is it? Oh yeah, yeah. Okay. Oh, you're on the phone too. Okay.
No, sir, I'm using my laptop. Okay, I will fix it the way it's like this.
Oh, okay, okay. Okay. Anna Francie is here. Rayline is not here. Raylene. Maybe
No problem, sir.
okay. Nightja is here.
Sir, yesterday my network was a bit bad, but I was there.
Yeah, I saw you. You were not there in the middle, but then I saw you again. Okay,
Yeah. It was a bit bad. Yeah,
right.
all right.
Francis is not here, right? Francis, I don't see him. Francis Give.
I think he was there a while ago. I don't know where he's gone now, maybe.
Yeah, because all of you guys are always present. I don't even have to check. But I don't know, people are losing connection. Okay. So Francis, I think he'll join back in some time.
No day, sir.
Sorry. Okay, so this is the problem. If you want, we can solve it now, or we can solve it tomorrow. You guys can try solving it, and then we can start with it tomorrow morning.
Tomorrow, sir. Thank
Tomorrow.
you. Thank you.
Okay. Okay then. Yeah, just when you're trying to solve it, if you try, just remember that some of the items are here in the bottom. So in the sentence written here, they are not in the table, they are in the bottom. So you'll have to read the table, read the bottom, and then try to solve it. Okay, just remember that. Okay, then I've marked your attendance. I'll see you guys tomorrow then. Tomorrow morning.
Thank you, sir.
Thank you,
Okay.
sir.
Bye.
Bye-bye,
I'll send you
sir.
an email for this book.
Bye.
Yes,
Thank you,
sir.
sir. Bye.
Thank you.
Yes, sir, please, the book.
Yeah.
Thank you, sir.
Okay.